Hi, good evening. Welcome to today's podcast. Today, Shiva Pratish, Kanishka, and Mithran join me for the topic the role of central bank in managing the monetary policy, inflation, and financial stability. I would like to give a kind of intro towards this topic today. What is central bank basically? A central bank is like captain of the ship because that steers the country's economy, right? So, it manages the money supply and its overseas banks and make sure everything in the financial systems works smoothly because of this central bank because they are the head authority towards the country's economy. So in India, this role is played by RBI, Reserve Bank of India. So which also prints out our currencies too. So how does this RBI manages our economy? Like they have monetary policies. The RBI tool is used to control the kind of flows of money in our economy. So I would like to explain in this monetary policy about two things, that is repo rate and second one is about cash reserve ratio. Repo rate is a thing, the interest rate at which bank borrow from the RBI. That is what repo rate. And cash reserve ratio is the amount of money banks needs to keep aside and not to lend out. This was two difference between repo rate and cash reserve ratio, which comes under the monetary policies of our economy. So second thing is what is inflation? So basically, inflation is when price of goods and services goes up and increases and making things expensive. That is simply about inflation. So our RBI keeps the inflation under control by two things. That is increasing the interest rate to reduce the spendings, like when prices rise too much, and second point is like lowering the interest rate to boost the spendings when prices are too low. So for example, during the pandemic, the RBI lowered the rate to help people's concern, and businesses borrow money easily during that time. So that is a quick explanation or an example for inflation. And how does this RBI keep the financial system safe? RBI makes sure banks are lending money responsibly. It also steps in to handle big problems like loans or scams that could hurt the economy. Recently, it has been regulating the digital payment and new financial techniques to make them safe for everyone. Even though we have all the protocols which was covered by RBI towards the central banks, as referred to everything, we have certain kind of challenges. Such as challenges in the future is balancing the economic growth with controlling the inflation rates, because we can't predict the inflation, right? The demand and supply will be change in market due to the cycle of a particular period or even for the time. So balance of economy with controlling inflation is a kind of challenge, and managing global issues like rising oil prices or economic also will be slowed down. So, comparing to the future goals, working on digital currencies. Now, bitcoins, even fintech, everything were inclusive. And toward this future view, um, we will be having a kind of traditional banking to be down and even for digital currencies to be up. And encouraging loans for green projects to fight the climatical changes. So this is what a kind of intro brought me about the topics for you guys. What about you?
Exactly, Jiva. Inflation management is another crucial function of central banks, and high inflation erodes purchasing power while deflation can stifle economic activity. The RBI uses tools like open market operations and cash reserve ratio adjustments to keep inflation within a target range. For example, their inflation target is usually around a 4 percentage, with a 2 percentage of tolerance band. What's your opinion, Shiva?
I totally Yeah, guys, I totally agree with it. But when it comes to inflation, that control is not moreover straightforward. So it's my point of view. When it comes to inflation, the straightforward control is not being in for so much of years today. When it comes to supply chain, supply side issues also, poor monsoon affecting agriculture can drive up the prices. So even some climatic changes and poor monsoon and more and more agriculture related issues, all of the side and all of them are affecting the prices also. So in such cases, monetary tools may not be enough for that kind of issues also. So coordination between physical and monetary policies become essential to tackle inflation, so that the physical and monetary policies can become useful to tackle such problems in the later years also, which are caused by some external environmental and some climate factors also. So climate, as we all know, it can't be controllable. But when it comes to what we can do is like when supply side issues also, and from agriculture point of view also, we can tackle it by influencing or introducing certain factors that can increase the efficiency of both the inflation and controlling it. So it can be straightforward, but when come to controlling it, we can maintain certain policies like physical and monetary. So what's your opinion, Mitran, about this?
So another key model of central bank is ensuring financial stability. To maintain the monetary or the currency value in the stability, the RBI regulates bank and financial institution, ensuring they maintaining adequate capital and follow lending practice. This reduces the risk of systematical failure like the 2008 global financial crisis. So they have maintaining the financial stability by ensuring putting many schemes and rules and regulation. This is my point, guys.
So I wanted to discuss a kind of case today, uh, because we can get to know about this. So I took a case example, liquidity deficit in December 2024. So the problem here is, Reserve Bank of India faced a significant liquidity deficit in banking system, which reached up to 2.43 trillions. This shortfall was caused by large tax outflows and the RBI's intervention in foreign exchange market to stabilize the rupees. So the deficit was posed as a challenges to monetary policy implementation and as well as the economic growth. So this was the case's problem. And they give a kind of solution towards this is CRR cut, open market operations, and forex inventions. Coming up to CRR cut, the RBI reduced the cash reserve ratio by 50 basis points and allowing bank to keep less money in reserves and lend more. Coming up to open market operations, it purchased government securities to inject the liquidity into the system. So, because liquidity is a kind where they can easily convert everything, so they implemented this. Coming up to forex inventions, the RBI sold the foreign currencies in the market to manage our rupees value and easily make the liquidity without any kind of pressures. So, the finally this case outcome is the action helped to improve the liquidity and made stabilize the rupees and ensure there is a smooth functioning of the banking system. And by supporting with this kind of strategy implementation with the effective monetary policies transmissions, the RBI maintained financial stability and promoted the economic growth.
Yes, yes, but there is also criticism that central banks like the RBI can sometimes overregulate, which might stifle innovation in the financial sector. For instance, while Digital banking is growing. Stringent compliance requirements can discourage smaller players from entering the market. What's your opinion, Shiva?
Yeah, that's a fair concern, but when it comes to regulations, we need to understand something to it's necessary to prevent some financial fraud and maintain some public trust also. So regulations are necessary for it, as we all know that moreover a technology or whatever the information related to anything, if the regulation is not on its toes, we cannot be as sufficient for as possible, because regulations must be there for some strict norms and regulation for it. So the RBA has been a proactive in promoting innovation, so that that initiative will be promoting and driving some of the innovative ideas and initiatives in the later days. And like the regulatory sandbox is one such example for fintech companies. So fintech companies use this regulatory sandbox as to provide some regulations and to maintain certain norms, values, and rules upon their company, so that they can be at their toes when it comes to initiating every initiatives they are heading to. So it's trying to strike a balance between some innovation and stability. So stability is one such important factor as when it comes to regulation, and even for success we need stability so that we can sustain the success for it of any company what we see. So innovative ideas and stability will foster the company into a better balance, so that they can be succeed in it. So it's my concern about it. So what's your concern, Mithran?
So, Shiva, coming to speaking about the innovation, central bank are also exploring digital currency. They haven't stopped into a real currency. They have moved on to the digital currency. The RBI is working on a central bank digital currency. CBDC is also, which could be revolutionize how money is used in the economy. It should be offer benefits of digital payment while being backed by the central bank's creditability. So it should not be not moving on to innovation. They have to be work on keep on working and bringing digital currency is more harder. So they are giving the utmost to the innovation and the stability. This is my point, guys.
Yeah, CBDC, that is central bank digital currency, is also exciting. But they come with the kind of challenges like cybersecurity risks and privacy concerns. The RBI needs to carefully design and test such kind of initiatives before rolling them out to the market. So it's a great example of how central banks are adapting the technological changes while managing their risks. And another important aspect is how the central banks manages the crisis. During COVID-19 pandemic, the RBI introduced measures like moratoriums on loan repayments and reduce the repo rates to support the economy, where I use the case as an example. So these actions provided a kind of liquidity and helped business and individuals to make sure and weather about the storm.
True, Jiva, but such measures can sometimes lead to unintended consequences like rising inflation or excessive liquidity. The challenge for central banks is knowing when to unwind these measures to avoid long term economic imbalances. What's your opinion, Siva?
Yeah, when it comes to maintaining confidence is very crucial also. RBI role in maintaining such public confidence is very, very important and crucial also. When it comes to a well functioning central bank, they need to assure market and citizens in where the economy that their economy is in safe hands, even during some uncertain or turbulent times also. So a functioning central bank, which is well functioned, needs to be addressing that economy should not fall or should not be in a very difficult situation as markets and citizens are aware of the trust they have when comes to central bank. So transparency in communication can create a trust among the um, public when comes to implementing certain monetary policies and everything, so that this kind of transparency and when comes to publishing certain monetary policies can create a trust and confidence among public also. So such role will be maintaining a confidence rate and more and more secure the future of the citizens economy and countries as well. So it's my point of view, everybody. And what's your opinion, Mitran, about this?
According to transparency is also a key for attracting foreign investments. So without a transparency, we cannot be ensure that foreign direct investment will be a succeed one. So by ensuring a stable economic environment, the RBI helps to make India a more attractive destination for global investors. Exchanging rate stability, inflation control, and financial sector health are all factors that investor considers. So it is not about only the FDI. They are investing in the various sectors by ensuring that there is a transparency in the process. This is my point, guys.
Yeah, absolutely, Mithun. Central banks like RBI are the backbone of economy. Their policies will affect everything from coming up to head to toe, like from the interest rate on home loans to the price of an essential goods. So it's a complex job, but their goal is always to create a stability and stable thing and drive towards the economy and as well as a good ecosystem. So it's also a kind of worth mentioning how central banks collaborate globally and make diversified with everyone. So this RBI works with institutions like IMF also, Indian Monetary Funds, and also other central banks to align such kind of policies and adhere towards the global challenges like currency volatility or some kind of trade imbalances, because we can't judge this might be the problem towards future, no? Because that is a diversified business where we touch up globally, so we need to maintain that also.
That's a good point, Jiva. The global economy is interconnected, and central banks can't operate in isolation. For instance, when the US Federal Reserve raises interest rates, it impacts capital flows into emerging markets like India. The RBI must account for such external factors in its policies. What's your opinion, Shiva?
Yeah, that's an important role also, and it's important and a very important role. And for me, that the role of central bank is also going to grow as economy become more complex. As complex, and we are in a VUCA world where economies are striving and getting more and more advanced every day. And the central bank is going to grow as more and more important here, so that they can tackle the inflation rate and manage what are the problems and issues, and when also promoting financial inclusion also, as finance and financial advancement and education is not well aware and among all the people in this India also. So everybody will be having the such financial awareness and financial education with the help and help of central banks also, so that their decisions have far reaching impacts on business and individuals also. More and more it will be on creating an advanced, and more and more it will be creating an opportunity for financial inclusion and managing certain crises and issues regarding to the economies and tackling inflation also. So it's my opinion about this. What's your opinion, Mitran, about this?
So the RBI have been adapting well to these evolving challenges. With the right mix of innovation, regulation, and foresight, it can continue play a vital role in ensuring India economic stability and growth. So they have to be focus on every sector and each and everything, so that they can be move on to economic stability and growth. They should not be lag on one thing. So they should focus in each and everything, and they have to move in stability. This is my point, guys.
Yeah, thank you, Mithran. So I would like to give conclude today. So remember that there will be kind of every challenge is an opportunity to innovate, learn, and grow. So whether you are or we are diving into an entrepreneurship, navigating the evolving tech landscape, or embracing the possibilities of AI, the future belongs to those who are curious, adaptable, and driven to make a kind of difference. So, thanks for joining everyone for today's podcast. So, we should stay inspired and we should get more and more of information about this fintech. So, that's what my key takeaway today. So, thank you for joining. Thank you.
Thank you.
Thank you, Jiva, for having me, and thank you all. Thank you.